Right. Welcome to our session today. Today, we want to look at intangible assets. We want to look at intangible assets. And we are also reminded, guys, that your assessment is due on Thursday. I'll work on some of the questions that I will post by tomorrow afternoon. So make sure that by tomorrow evening, you check if you have got serious disparities, as usually happens for this module. Make sure that you alert me so that I can be able to assist you. And you'd find that your assessment will be due on Thursday. So don't wait for me to respond on WhatsApp, because when I'm busy these days, I'm a little bit busy. My response time is a little bit slow. So make sure that you call and alert me so that I can be able to assist you by the due date. But I think tomorrow I'll work on some of the questions and I will be able to give you part of the feedback. So then your responsibility will be to check if there are any disparities. Then you alert me, then we can be able to see how we can help each other. Right. And again, I'm also going to organize another session during the weekend on Saturday. A normal class, it will not be a very long class, a normal class. We want to push up so that we can keep pace. So I'm going to have a class on Saturday. I'll tell you the exact survey Friday, but it will not be very early. I think anytime from around 10, 11, I will inform you by Friday. We need to speed up so that we can catch up. So I need to do some classes along the way. So I'll be informing you every Friday if you are meeting during the weekend. We need to cover up so that we can be in line. Right. So as I said before, that today we're dealing with intangible assets. Right. Intangible assets are identifiable non-monetary assets without physical substance, controlled as a result of past events, and and there should be an expected inflow of future economic benefits. So narrowly defined, although it's not exact, but what can give you an idea is that an intangible asset, while referring to those non-current assets that do not have a physical existence, of course, excluding monetary assets. We don't include monetary assets in there. So we're trying to take out things like investments in shares, like money deposits, fixed deposits. We're taking them out. They are not intangible assets. So examples of intangible assets, they include things like licenses, franchises, formulas. Like as we saw during the COVID-19, the formula to manufacture a vaccine was it's actually an intangible asset, right? The franchise, for you to run a McDonald's, you have to go and pay for that. A license to manufacture a particular product, a formula that you can be given by another company to manufacture their product, and then you pay for it. That is an intangible asset. Right. Intangible assets are accounted for in terms of IAS38. Please note, don't refer to the page numbers that you find in this document. I haven't updated the page numbers to your latest edition. So when you see page numbers, don't refer to them. Otherwise, they will be different in your case. Once I do that, I will resend the document. Right. Intangible assets, when you acquire them, they are initially recorded at cost. And the cost would include the acquisition price, non-refundable taxes. For example, if there is VAT and you are not a VAT vendor, you include the VAT in the cost of your asset. If there are any discounts, you have to subtract any discounts. And then you add any directly attributable costs, So if you are in an exam scenario or in a test scenario or at work, and there are directly attributable costs that are associated with acquiring an intangible asset. Those costs should be added to the intangible assets. Actually, what I'm talking about is a purchased intangible assets. We've got two types of intangible assets. We have what we call a purchased intangible asset. That is an intangible asset that you buy from someone else. And we've got what we call an internally generated intangible asset. That is an intangible asset that you create on your own. Right. Examples of costs that are directly attributable: cost of employee benefits. Let's say you are trying to create a formula for manufacturing chocolates, and then you employ some of your employees. They are working within that research and development that you are doing. Part of those development costs, the employee benefits that are associated with bringing the intangible assets into a working condition are also included in the cost of the intangible assets. We also include professional fees. For example, you might need to engage your lawyer when you are negotiating with McDonald's, with the owner of the franchise of McDonald's, to run McDonald's in South Africa. So you might maybe need your lawyer to help you, and you have to pay the fees for the lawyer. That can also be part of the cost of the asset. Cost of testing, whether the asset is functioning properly. Let's say it's a software to process financial transactions, in accounting software, in accounting, a new accounting package that you developed. Then cost of testing to see if it's working properly will also be included in the cost of the asset. So those are examples of costs that can be included. So you'd find that in your exams and in your assessments, normally they will tell you that costs that were directly attributable. So as long as they are directly attributable, then you should know that they should be included in the cost of the intangible assets. Right. Then we've got examples that are not part of the cost of an intangible asset. Cost of introducing a new product or service. Let's say you've just launched a new software, and then you are trying to advertise it. Maybe it's a new system of ordering that you have introduced, and you are trying to promote it to your customers. All costs of that advertising will not be included in the cost of the intangible asset. All right. Cost of conducting business in a new location or with a new class of customer will not be included. Administration and other general overheads, unless if they say, you would find that there are sometimes that they will tell you that there are admin costs that are directly attributable, then you would include them. But if they just say admin and other general overheads in general, then you don't have to include them in the cost of the intangible asset. Right. So that's an intangible asset that is purchased. Instead of buying, you can produce your intangible asset. That's what is called an internally generated intangible asset. As I said, you can create your own at your own organization, your own accounting package. So that will be called an internally generated intangible assets. Right. This is one way we have to be very careful, because it is the one that has got more complications. Right. Normally, an internally generated intangible assets is created in two phases. We have first what we call the research phase. This is when you are just trying to see whether or not you should go on and develop the new medicine. For example, maybe there's a drug that you want to manufacture, which can cure cholera, and you are trying to research if whatever you are trying is feasible. You are researching. Then there will be a time when you are satisfied and happy that no, we have done research, now we can go on and develop the drug. That will be the development phase. These two phases are very, 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 very important. Why? Because all costs incurred during the research phase, they are expensed. We don't recognize the intangible asset at that stage. Why? Because we are not yet certain that they will be. Remember that an intangible asset should meet the definition of an asset. And when we look at an definition of an asset, it is a present economic resource. Now, during the research phase, it is not yet an economic resource because you are not yet sure if you are going to go on and develop the item. We are simply finding out if it is possible to produce the item. So the research phase, it's treated as expenses. So all costs incurred during the research phase are treated as expenses. Please ignore these pages. And those are the ones that I've said that I've not yet updated them. Right, but then when you reach the development phase, that's when we now recognize the intangible asset. Right, and for us to say this development, it should demonstrate all of the following. So if some of them factors are demonstrated whilst some are not, that means it is not yet an intangible asset. We can only recognize an intangible asset when all of the following have been demonstrated by the intangible asset. Right. That is the technical feasibility of completing the intangible asset so that it will be available for use or sale. So that means it's possible technically to go on and produce the drug. There's nothing that makes it impossible to do that. Right. It is the intention to complete the intangible assets. That means we are now committed that we are now going to produce the drug and we will sell it. And you have the ability to sell. It can be a legal ability or market ability, which makes it possible for us to sell that intangible asset. And it should be able to generate probable future economic benefits. All evidence should point that we can be able to sell it and get economic benefits. We should have adequate technical, financial, and other resources to complete the developments. That means we should have expertise, whether within the company or we should be able to hire them from outside or temporarily or permanently. We should also have the finance that is necessary for us to complete the project. And all other resources, there may be raw materials. It doesn't mean that we should have them where we are, but we should have access to them to the extent that if they are required, they will be available when and if required. And we should be able to measure the expenditure attributable to the intangible assets. Remember that all assets are only recognized if we can be able to measure the intangible asset. Right. A cost of an intangible asset, right? They should be directly attributable. For example, raw materials that go into the manufacturing of the drug, when you are developing the drug, the salaries of the employees who are working on the development of the drug, fees to register a legal right. Please, you should know that when you are purchasing a license or a right registering, normally it's the initial registration that is regarded as part of the intangible asset. Actually, annual renewal will usually be taken as an expense. Right. Amortization of patents and licenses that are used to generate the intangible asset. Right. Remember, just like on PPE, if we use another asset to develop the current asset, any depreciation or amortization of the asset used, it will be included in the cost of the new intangible asset. Right. These costs are excluded: selling, administration, and other general overheads. Inefficiencies and initial operating losses. So that means before, normally you know that when you use an asset in its initial stages, it's likely to have losses. So any losses, initial operating losses, are not regarded as part of the cost of the intangible assets. Cost of training staff to operate the asset. Let's say it's a new software and you are training your employees on how to use that software. Any cost of the training will not be part of the intangible asset. Any questions so far? Right. After recognition, we said initially we record the cost. Then after initial recognition, how do we record? Just like PPE, you can choose either the cost model or the revaluation model. But you'd find that in most instances within our module, except maybe a few theory questions, they usually talk about the cost model. All right, so if an intangible asset is accounted for using a revaluation model, all the other assets in its class shall also be accounted for using the same model unless there is no active market for those assets. Now, if we're using the revaluation model, just like PPE, we have to appoint someone who can be able to measure and verify the value of the asset at year end. And it can be our official or it can be an outsider. You can even use a member of management who is experienced in who knows how to value the assets. You can also use such. So they can just come and then say that the intangible asset is now valued at 700,000. If it was at 600, then you just recorded the revaluation. Right. But then when we are using the cost model, we'll be recording at cost less accumulated amortization. On intangible asset, we don't have depreciation. Instead of depreciation, we've got what we call amortization. So normally you would find that intangible assets are amortized over the useful life of the asset, unless if they've got what we call an indefinite useful life. For example, you can create your formula which you know that you use it forever, so it doesn't have a useful life. Such intangible assets are not amortized. I think you are going to find it in this document here. Right. Right here, an intangible asset with an infinite useful life is amortized, and an intangible useful life is not amortized. So there's no amortization if an intangible asset has got an indefinite useful life. That means it doesn't have a limited useful life. Please remember, ignore these pages when you see them. You can just find the relevant ones in your recommended text. Right. The depreciable amount will be amortized over the useful life of the intangible asset, just like what we do on PPE. So if it's 7 years, you just take your cost minus any residual value. If it's there, then divide by the useful life. And it is apportioned. That means if we started using the intangible assets in November and our year is ending in December, you should remember to calculate your intangible asset over the two months. All right, amortization shall cease at the earlier of the date that the asset is classified as held for sale and the date that the asset is derecognized. When you are derecognizing, maybe you are selling or you have officially stated that the asset will no longer be used. Or maybe when it's held for sale, which is our next topic, that means when you made a firm decision to sell the asset. All right. Right. Your residual value shall always be assumed to be zero unless there's a commitment by a third party to purchase at the end of the useful life and there's an active market for the asset. So that means we know that we can sell it at the end of the useful life. Then the residual value can be determined by reference to that market. So if you see a question in your exam or your test or your assessment, which clearly states that the residual value is 50,000, that means they know that maybe either there's a party that can be able to purchase at that price or there's an active market. Right. So if it's there, you have to take it into account. Right. Disposals are recorded at carrying amount. When an intangible asset is disposed, we record it at carrying amount. and we remove it from the books, just like our PPE. And intangible assets can also be impaired. So when they are indicators of impairment, we have to test for impairment. But for an intangible asset with an indefinite useful life, the company is forced to test for impairment every year. So if an intangible asset has got an indefinite useful life, the company should test for impairment each and every year. Any questions? Right. So please, when you get time, just try to look at these things, and then you can see how to account for them. I've sent you this document. You actually have it. So don't worry about it. You already have it. So now I want us to, for today, I will do one, if we're able to go to question 2, I'll also try to do it so that you can see how we account for the intangible assets. But if we're just able to do one, I'll do the other one maybe on Saturday, and the non-current assets held for sale. So please, if you find anything on non-current assets held for sale in your assessments, make sure that you talk to me so that I can help you, because I think you will be able to do that during the weekend, from weekend up to next Tuesday. Right. Let's start with this question. I've also sent you these questions. Right. Smart Apps Limited is a computer software and application development company based in Johannesburg. The company is a 31 December year end. The following details regarding the assets of the company are available. Right. We've got a software license and we've got profit application. Right. Required disclose the intangible asset note to the annual financial statement. Right. The intangible asset note is just like your PPE note, whereby we start with the carrying amount at the beginning of the year. We determine our additions, we determine our disposals, we determine our amortization during year. If there is impairment, we determine our impairment. So just like that PPE. Right. So there's a distinction in our intangible assets between purchased intangible assets, that is intangible assets that you buy from other parties, and internally generated intangible assets, that is the intangible assets that you produce on your own. So they are separated within our intangible asset note. All right, so now let's look at this one. Let's look at the additional information. Normally these things will tell you the policies that the company is using. Are they using the revaluation model? Are they using the cost model? Intangible assets and property, plant and equipment accounted for in accordance with the cost model. So they are using the cost model. That means it will be cost less accumulated amortization. Amortization of intangible assets and depreciation on property, plant and equipment are accounted for in accordance with the straight line method over the assets' estimated useful lives. Right. Then assume all amounts to be material. The term value of money is not material. Right. Let's start. Software license. On 15 February 2016, Smart Apps Limited entered into negotiations with an American supplier to acquire a software license that would be used in the development of a home gardening application, My Garden. Right. A license, a software license, is an intangible asset because it doesn't have a physical existence there. Right. This transaction was concluded on 1 March 2016 at a cost of $25,000. The amount is payable in 2 installments of $10,000 on 30 June 2016 and another of $15,000 on 31 December 2016, respectively. The software license was available for use as intended by management on 1 April 2016, and an estimated useful life of 5 years has been allocated to it. This software license has an estimated residual value of nil. Then the following dates and exchange rates are relevant to the transaction. Right. Number 1, when you acquire an asset in Forex, it has to be translated to local currency using the spot rate on the transaction date. Right. Now, these guys, although they started negotiating on 15 February, the deal was only concluded on 1 March 2016. So we can assume that 1 March 2016 is the transaction date. So that means when we translate this 25,000, we'll translate it at 11 Rand 8, the spot rate on the date of the conclusion of the transaction. So we don't use the date when they started negotiating. And the date that the payment will be done, that is 30 June 2016 and 31 December 2016. They don't affect the cost of the asset. They will only affect the liability. That is what we owe the these guys, because it will be affected by the movements in the exchange rate. But the cost of the asset will not be affected. So for now, we're dealing with the PPE, we're not dealing with foreign exchange gains or losses. So how they are going to pay is not an issue in this case. It could have been an issue if we had what we call a significant financing component. Remember that if just like what we did on PPE, if a payment is deferred beyond normal credit terms offered by the seller, then we have to take into account the significant financing component. We have to take out the portion that represents interest. But here they didn't tell us that the payment is beyond the normal credit terms. So we assume, as long as we're not told that they are beyond the normal credit terms, we assume that they are within the normal credit terms. So there's no significant financing component. Right. So this intangible asset will be translated at 1180. And another thing, we should know that we should provide for amortization. And this amortization will be provided from the date that the asset was available for use. So you should remember that just like PPE, we start to provide for amortization from the date that the asset was available for use. Right. So let's do our calculations on the intangible asset. Remember that our year is ending on 31 December 2016. So it was acquired during the current year. Right. Right. So we'll start with the software license. Just a minute. Right. We have our software license. So our cost would say the cost in Forex, which is 25,000, multiplied by 11 rand 80. So if an asset is bought in Forex, we have to translate it to local currency. What do we get? Thank you. 295,000. So that will be the costs in rands. Right. Let's remember that the residual value is new. The residual value is the estimated useful life is 5 years. The residual value is new, and it was available for use from 1 April 2016. Remember that our year is ending on 31 December 2016. So it was only available for 9 months, April to December, 9 months. So we would say our amortization $295,000 divided by 5 multiplied by 9 divided by 12. We get 44,250. Thank you. So that would be our amortization. So these are the calculations that we need on the software license. Any questions on the software license? Right. Then we go to the profit application. During the 2016 financial year, that is this year, Smart Apps Limited embarked on a research and development project to develop a fitness application named Profit. Research commenced on 1 March 2016. Then on 31 May 2016, management was presented with sufficient information to indicate all the criteria for the recognition of an internally generated intangible assets have been met. The development of the profit application commenced on 1 June 2016 and was completed on 30 November 2016. On 1 December 2016, the profit application was available for use as intended by management. The application is an estimated useful life of 3 years and no residual value was allocated to the application. Right. So we have the profit application. So this is an internally generated intangible asset. Right. It is made up of 2 phases. We've got the research phase, which is they started research on 1 March 2016. To 31 May 2016. All right. Expenditure during this period would be expensed. So we want to recognize an intangible asset during this period. All the expenditure that will be incurred will be expensed. Right. Then we've got to the development phase. Which is from they commenced on 1 June 2016 to 30 November 2016. Right. Expenditure during this period would be capitalized. When you say it's capitalized, that means it's added to the cost of the intangible assets. Right. Actually, in this case, we want to do the intangible asset note. So this is the expenditure that we are interested in. this is the expenditure that we are interested in. But if you are also doing the profit before tax, you would also need the research expenditure. So for now, we're not interested in the research expenditure. We're only interested in the what? Development expenditure. Right. But for the sake of we're in class, I would show you how to determine both the research and the expenditure. Right. So we've got the research portion and the development portion. Right. Right. We are told that 2 permanent employees, each, you should be very sensitive to these words, earning a monthly salary of, and this is a monthly salary of 25,000, worked full time on the project throughout the research and development phase of the application. Right. So we have got what? Salary for permanent employees. They are saying that they worked throughout the research and development phase. So that means we're going to have during the research phase, these are 2 employees and they are earning 25,000 per month. And the research phase is made up of 3 months, March, April, and May. 3 months, March, April, and May. Then the development, 2 employees again, earning 25,000 per month. And for how many months? That is from June until November. That is 7. That should give me 6 months. I think it's 6 months. Am I right? Just verify. Is it 6 months? June to November. That's 6 months. Yeah. So what do we get? Those 2 figures. $150,000. 300,000. Right. Then administration and other operation costs directly attributable. So you can see here, we know that normally administration costs should not be included. But whenever they say directly attributable, that means they are very much related to the intangible assets. So you should include them. So they are 600,000 and were incurred evenly during the research and development phase of the application. So it's 600. So when they say evenly, that means every month they were the same. So we've got administration and other operational costs. Right. We know that our research and development took a total of 9 months from March until November. It's 9 months. Of those 9 months, 3 were for research. And 6 were for development. Right. What do we get?
Hi, Eugene.
Yes.
I'm a bit confused with the months because on top you said the research phase is from the first 8 March until 31st May. But when we get to the admin cost, why are we then saying 3 months over the 9 months? I'm confused with those months there.
Those are two calculations, one for research and development. The 9 months is the total period for research and development.
Oh, yeah, that's fine. I see. Okay. So on the salaries, are we not supposed to do the same calculation?
No. They are different there. The salaries they are given per month.
For the
but
period.
the admin is given in total.
Oh, okay. No, it makes sense then.
So that's what I said, that you should be very sensitive and to those words, because they said they are paying these employees 25,000 per month. But if they said they paid them 25,000 throughout the research and development, then we're going to do the same thing that we did on the admin and other operational costs.
Okay, no, thank you. It makes sense then.
Okay. Right. So that is 200,000 and 400,000. Right. Then depreciation on computer equipment used throughout the year. I want you to, please, we should be very careful with these words. This computer equipment was used throughout the year. That means it was used for 12 months, including the months outside the research and development. That is the January, February, and December. Amounted to 36,000. That's for the whole year for 2016 financial year. This computer equipment was exclusively used for research and development of the profit application during that period. Right. So we've got this computer equipment. It was there throughout the whole year, from January to December. January to February, they were using it for something else. Then March to May, they used it for research. June to November, they used it for development. December, redeployed to the normal day-to-day duties. So this 36,000 is not only for research and development. It's for throughout the year. It's for 12 months. Right. But we know that out of those 12 months, only 3 are for research and only 6 are for development. So we have got depreciation, computer equipment. Right. I think you should know that principle that I said, that if you use one asset to develop another, the depreciation of the asset used during that period should be added to the cost of the asset. Right. So that means of this 36,000, depreciation for 3 months will be regarded as research expenditure. And the depreciation for 6 months will be regarded as development expenditure. So whenever we use one asset to manufacture another, the depreciation of the asset used during that period will be regarded as part of the cost of the asset being produced. Right. So I see here that I've been given 9,000 here. $18,000. So 9,000 will be allocated to research, 18,000 will be development. The other 9,000 would remain as depreciation. Right. Then after the overwhelming demand for the profit application at the launch thereof, an overseas company made an offer to purchase the application. After careful consideration, management decided to accept this offer, and on 31 December 2016, sold the profit application for 1 million in cash. They then sold the application. Right. And remember that it was on 1 December, that's when it was available for use. So we'll provide amortization from 1 December up to end of year 31 December. It was sold at the very end of the year on 31 December. So there will be amortization for December. Right. So now we can determine the cost of the intangible asset. Right. We'll have our total. Right. Then amortization. Right. There's no amortization on the research. It's on the intangible assets. Right. We are told that estimated useful life is 3 years, no residual value. And it was ready for use on 1 December. So it was only available for 1 month during the current year. So we have 18,000 divided by 3, multiplied by 1, divided by 12. 1 month, that is December only. What do we get? $19,944. Then we get disposals. Remember that they then sold it. Right. So now I can be able to do the notes. Notes to the financial statements of Smart Apps Limited. For the year ended 31 December 2016. So we'll have 2 categories. We'll have purchased intangible assets, internally generated, then we'll have our total. Right. You'd start with your carrying amount at the beginning of year. Remember, there was nothing, which is made up of the costs and the accumulated amortization. Right. Then we'll have additions at costs. Here I can also add that this one is the software license. But if there are many, you don't have to write one by one. Here I can write that this is the profit application. But it can happen that you can have more than one internally generated. You don't have to write that. Right. They remember that they purchased, it was purchased for $295. The internally generated, we take the development costs. So that will be 295,000. This one. Right. Then we'll have, oh, no, it's not 698. This one is the final one. It's supposed to be the cost, which is 718. Sorry about that. Right. Then we'll have amortization during a, so it's not called depreciation. Right. For the purchased, we calculated it, we found it to be 44,250. And for the internally generated, we found it to be 19,944. You are the one who gave me the 295,000, isn't it? Unless if I'm making a mistake. Isn't it this one that you gave me? The cost of the software license. If I'm not mistaken, you are the one who gave me. Right. Thank you. Right. Then we remember that this intangible asset was then disposed. So we leave our disposals. Disposals are recorded at carrying amount. So we don't, in our intangible asset note, we don't record the selling price of the asset. We don't record the selling price of the intangible asset. We only record the carrying amount. We remove it at carrying amount, which is this one here. Right. Then we get our carrying amount at end of year. Which is made up of cost, accumulated amortization. Right. We still have this software license. The cost is 295,000. And the accumulated amortization is 44. Our carrying amount is 250. This one is 0 because it has been sold. Right. Right. Any questions there? Right. Then we have to state that if you've got any intangible assets, the software license is a carrying amount of 250, 750, and a remaining useful life of remember that it had a useful life of 5 years and 9 months have gone. So we now have 4 years and 3 months remaining. Of 4 years and 3 months. I've just taken out the 9 months that have elapsed during the year. It had a useful life of 5 years. So 9 months have already gone. So we are left with what? With the 4 years and 3 months at year end. So if the profit application was still available, we're also going to write. So I'm not writing anything on the profit application. Why? Because the profit application was sold. It's no longer there. So for all intangible assets, you are supposed to state the carrying amount and the remaining useful life. Any questions there? Right. Then the next question. Prepare the journal entry in the books of smart apps to correctly record the sale of the profit application. Remember that the sale was for cash, for 1 million cash. Right. Now our journal entries. Right. When you sell your intangible assets, we debit our bank. Remember, bank is an asset. And when we receive money, our assets will be increasing. So we're going to debit our bank with the 1 million. Right. You also have to debit the accumulated depreciation. Remember, accumulated depreciation is a negative asset. So it has got a credit balance. So when we sell an asset, we have to remove the accumulated depreciation. To reverse it, we have to debit it. That is all the accumulated, not depreciation, sorry, amortization. So that will be 19,944. Right. Then you also have to credit your intangible assets. Which is the cost of the intangible asset, which was 718. Then you credit your profits on sale of intangible assets. When you sell your assets at more than its a carrying amount, then there's a profit. Like here, we know that the carrying amount was 698, but then they sold it 1 million. So they sold it at a profit. But if they sold it at less than the 698, then we're going to say they've sold it at a loss. What do you get? To 82,000. Are you sure? Isn't it 300 something? This one? I don't see it being a 282. I think it's 301 something. 301,044, if I'm not mistaken. That is the correct one. I didn't say minus 718. We said 1 million minus 698, the carrying amount on the date that the asset was sold. All right. Any questions? Right. Now I would like to do something that they didn't ask about. Right. Let's assume that they asked you to do a journal entry for the costs related to the internally the profit application. Right. You are going to debit your research costs with 359,000. And research costs are an expense. They go to the statement of profit or loss. So that could have been the 359. Then we're going to debit intangible assets. Profit application with the development costs. The development costs are capitalized to the intangible assets. Then we're going to debit depreciation, computer equipment. Remember, our computer equipment did total depreciation of 36,000. But of that 36,000, we had 9,000, this one here, 9,000 attributed to research and 18,000 attributed to development. So that could have been minus 9,000 minus 18,000. It was going to be 9,000. And then we're going to credit accumulated depreciation, computer equipment. The 36,000. And assuming that all the research and other expenditures and development expenditures are paid through bank, we're going to say 359,000 plus 718 minus 9,000 minus 18,000. Remember that the 359 includes depreciation. Depreciation is a non-cash item, and the 718 includes the 18,000 depreciation. That's why I've subtracted the 9,000 and 18. They are non-cash items. They're included in this 36. What could you have got? $1,050,000. So that could have been our general entry. So all research costs will be budgeted together, and they will be called research costs. All development costs will go to the intangible assets. And any costs that are also incurred, which any expenses which do not fall within the research and development bandit will be recognized as other expenses. Any questions there? All right, I wouldn't, it's already late, I can't start another question. So please, you can try the question 2, then when we meet on Saturday, we'll do it together. We'll do it together, but you can try it so that you can be able to see where you were right and where you were wrong. So I'm going to give you feedback by tomorrow afternoon. on the assessment. And please check in the evening if you have got any things that are different, which are not on the feedback that I will give, and inform me accordingly. Thank you so much, and God bless you richly.